Hello, welcome to More Than Meets the DIY, a virtual education series presented by the Pacific Northwest chapter of the Recording Academy and Sonic Guild Seattle. My name is Jessica Toon. I'm the executive director of the Pacific Northwest chapter of the Recording Academy. We'll be hosting a new session in this series the first Tuesday of each month through November. Each will feature a specific topic sourced by feedback from our music community. So if you have a topic that you'd like us to cover in the coming months, we'd love to hear from you. Today, we're going to get into financial wellness for musicians. We hear about this constantly from people in our community, people wanting to learn about best practices related to business formation, managing multiple revenue streams, budgeting, cash flow, investments, tax deductions, and we'll answer all of your pressing money questions. Through this conversation, we all agreed it's critical to have a working musician at the center of it. So today's session will be moderated by Kay Van Petten. Hi, Kay. Are you here? Hi.
Hey, how's it going?
Good. Thanks so much for joining.
Thank you for having me. Thanks, Jessica. Hi, everyone, and welcome. I'm Kay. I'm here on behalf of Sonic Guild Seattle, and we are a nonprofit that builds community to support the creation and performance of local music through grants and education sessions like this. And you can learn more about that at sonicguild.org. But I wanted to share that the Q&A is now open. So if you have any questions throughout the duration of this while you're watching it live, drop them in the chat and Jessica is going to watch them. And in the last 20 minutes, we're going to get to as many questions as we possibly can. Sound good?
Yes. So the reason why we wanted you to lead this conversation today is because you intersect the ecosystem in so many different ways. So just so the folks know, in addition to being a musician, you run marketing for Sonic Guild, you serve on the boards of KEXP and Freakout Fest, and you're involved in the music community in multiple ways that I think are really useful to this conversation. Also, I know you just went through your own taxes, and as a musician with multiple different revenue streams, I know that you spent some time with Dominic, one of our experts today, and so I think that that's just an illuminating insight, and you being able to share some of your personal experiences will really help add some gravity to the conversation today. So like Kay said, I'll be monitoring the Q&A. I'll come back about 20 minutes before we end. So drop us a question. We'll get your specific questions answered. And as well, we'll be sending a follow-up email tomorrow with some additional resources. So I'll turn things over to you, Kay. Thanks so much.
Awesome. And I would like to introduce you to our incredible panelists. So today we are joined by Stephen, Keaton, and Dominic, and I'm going to let each of them come on, unmute, get your video on, and introduce yourself. So if you want to tell us your name, a bit about what you do and your connection to the music industry. We can start with you, Stephen.
Cool. So my name is Stephen Palin. I'm the Director of Operations at KLBM. So we are an entertainment business management firm with offices here in Seattle and in Nashville. Business management, basically what it is we take care of anything financial health related to our clients who are touring and performing artists, songwriters, producers. We'll do things like bookkeeping, record keeping, setting up bank accounts, business entities, handling all types of insurance. I'm sure we'll get into it, but that's kind of a high level of what I do.
Awesome. Dominic?
Yeah, hi, I'm Dominic. I've been a musician in Seattle for about 20 years, coming up on that. And I also run a small tax and bookkeeping company called Mainstay Tax and Bookkeeping. And I specialize in working with artists, from musicians to ceramic artists, photographers, and everything in between.
Keaton.
Hello, everyone. My name is Keaton Layman. I'm currently a client advisor at Avantia. We're a small multifamily office in Seattle. And my role is to help my clients pursue and achieve their financial goals. I specialize in building and implementing financial plans using a framework known as liability-driven investing. And essentially, it's a strategy that uses your life's priorities, whether that be to expand and grow your business, retire early, work forever. I can take all that into account to build complex financial plans. I'm very grateful to be here today.
Amazing. Wow, we're already talking about retiring early. Let's make that happen today. So first I want to talk a little bit about just foundations of business as an artist. So let's start by talking a little bit about when should artists form business entity. So how do you decide between an LLC and a sole proprietorship or an S corp or all these decisions? How do you make that decision and why is it important?
I'll start. My approach to that, what I suggest to my clients is so first of all, you're automatically a sole proprietor when you start off with your business. You file a Schedule C on your taxes. That's a business tax return. And I try to recommend all my clients to stay a sole prop as long as they can, because it makes the whole process easier. When you start joining together as like a band and trying to form an entity like that, you automatically become a partnership. And that is a little bit more complex of a situation as far as entity formation. More like dialing an entity formation, because you're automatically a partnership when you work with somebody. And then your tax return is way easier. So I recommend people stay as a sole proprietor, or you can also do an LLC that gives you some limited liability protection as well. But yeah, that's what I recommend to most people to start off, and then moving from that into a partnership or even an S corp if that's appropriate for you.
And what kind of protections do artists need if they're deciding to become an LLC? What kind of protections do you mean when you say that?
It gives you limited liability protection, LLC, which just means that your personal assets aren't at risk. So let's say that I'm a business, I'm a working musician, a solo artist, and I have a guitar, a music stand, a microphone, and some recording equipment. But I also have a car, and I have a house, and I have a great baseball card collection and a great record collection. If I'm not an LLC and I get sued, that whoever is doing the suing can kind of come after all of my assets, personal assets. But if I'm an LLC, they can only take my business assets and run that dry, but my personal assets stay safe. So that is one benefit.
So say, for example, like your band goes on tour, and at the end of the show, the drummer like throws a drumstick and pokes a kid's eye out or something. As long as you have a touring business entity set up, you're not personally liable. It's just the assets that's within that business. Some of our clients have set up, the touring entity, the merch, the recorded music and it really depends on any point in the artist's career and like when that makes sense to set up. But that's where it can, as your business grows, you can kind of have those conversations.
The last point I'll add there, Kay, is that a lot of times LLCs will have debt attached to them too. And it creates a feature where you have a sort of debt protection from creditors if your music business is big enough. And that can be another good barrier to separate, like what Stephen and Dominic were saying, your personal life from your business life.
Awesome. And you already touched on this a little, but I want to specifically ask for solo artists versus bands, how is this different and how do you approach it if it is a group of people? How should you approach setting up your band or your artist group with multiple people? Should you get together and talk about it? Should there be a document? Do you need a contract? How do we do that?
Yeah, for our clients, I mean, we have every combination, every type of entity. It really, I think it starts with, your project and your group or however you're set up to have those conversations where, for example, we have a client who's, they're technically a band, but the front man, the singer, he writes all the songs, he owns it. The LLC is just in his name. Or like another band of four where it's a husband and wife doing, they're married. They own everything in the in like the recorded music, so the songwriting business, but they've brought in their their drummer and their bassist for the touring entity, and so that one's a 4-person business. Really depends, and I think we're probably going to be saying that a lot, that it depends. But yeah.
Yeah. The only thing I would add to that is sorry if I'm getting a little off topic, but with the sole prop and the LLC versus the partnership and when it's the right time to move over, basically one person can handle a lot of the expenses and income of the band. And the way you kind of separate that out so that not that one person is taking on all that liability is just by paying out the different musicians in the band. And so everybody is their own sole proprietor or LLC, and they're responsible for their own expenses, their own tax returns, and then that income doesn't get put on one person. They have to pay all the taxes on it. Yeah.
And Dominic, you're in a band, correct? How did you approach making these decisions in your band, Warren Tunes?
That's a good question. My band, the way it's set up is that someone else actually runs the money. And it all kind of goes through them. But yeah, that's exactly how we do it. We all have our own businesses, and I get paid out. And then, I get paid more than $600 in a year from my bandmates, from the person that essentially signs all the W-9s. And so, so I'm responsible for reporting that income and finding my expenses, and that's how it works for us, and it works really well. It's easy. You don't have to do a business tax return. It's all within your normal 1040. So if you're just working with TurboTax, they kind of make it really easy. So that's how we've approached it so far.
Awesome. And so say that I've gotten to a point in my group that, we're taking on some risk. Maybe we are going on tour with a drummer who is maybe going to be doing some damage, and we decide to start an LLC. How do you go about doing that? Maybe Keaton, if you want to take that.
Yeah, it's really not as hard as it sounds. I know the first time I heard about LLCs and S corps, it's quite intimidating, but really you just need there's a directory on the Washington State website that outlines every LLC and name in existence now. So the first step is to choose your name. Then you need to choose who gets the legal forms. So essentially a home address will work, or if you have an office. And then you need to submit a certificate of formation, which this is better outlined online. But the basic steps are: go online, figure out a name, fill in the certificate of formation. Generally, I recommend my clients to create an operating agreement. This outlines who does what and is important. It's not required, but I do feel it's important for outlining the different rules if it's a multi-member LLC. You'll also need to obtain an EIN number, which is like a tax ID number, and you can get that through the IRS website. And then that's about it. And Dominic can talk more about the tax side of this. That's not my specialty, but there's a lot of advantages, like we mentioned. You can own things in the LLC. You can buy band equipment in the LLC. If you get big enough and want to own rental properties in the LLC, it's really a multi-use vehicle to add that layer of creditor protection.
Yep. And from a tax standpoint, being an LLC doesn't change anything from being a sole prop. So you don't have to be scared of, when you go to an LLC, how is my tax situation going to change? Well, it's not going to change unless you use that LLC to then form a partnership or an S corp.
One thing also, that's an option if you don't want to be manually putting in these filings to the state yourself. There are options out there. It's called a registered agent service or entity manager. There's a bunch of them out there that handle a lot of that stuff for you. So that's also an option there. Like literally, if you just Google it, that is there. And to the point about the operating agreement, that's something that is super important, I think, to be talking about if you're in a group with more than just yourself. It's almost like a prenup, basically. it's better to have conversations about money, even though it's hard and kind of awkward. It's easier to have those kind of conversations about money when everything's good and there's not really money coming in yet. Who wrote what song, which percentages and stuff. Um, um, I think it becomes I I would say feelings come in when money comes in if like a record deal comes knocking. So on that, split sheets are important. I don't know if we want to get into that stuff, but that's one piece.
No, that's
Steve,
great. What, just for context, for those who don't know, what is an operating agreement and what are the basic elements of that that you should build?
Well, probably a lawyer would be able to speak to this more. I mean, it basically you can, and I would recommend talking to a lawyer when, once things are kind of rolling enough to be able to, I guess, afford that hourly bill or however they bill it. But it would kind of spell out how you bring on members or how to protect the band or the music if someone were to leave, or basically just how the business would work, for starters, basically, and how you would kind of split up the revenue streams that come in, um, for starters. Yeah.
Great. Dominic, were you saying something?
oh, I was just going to ask Stephen, when you talk about those services for a registered name, do you mean like LegalZoom would be an example that you could find online that would set that up?
Yeah, I've never used LegalZoom specifically, but yes, at my firm we use a specific entity manager that works with business managers. Um, that's kind of I guess they have everything kind of packaged up for us. But there's kind of all levels from, I don't know, LegalZoom to specific services for you. But yeah.
Great. So now I want to ask, when is the right time that you should hire someone like a manager or accountant or lawyer to look after all these things? Because when you're just getting started, right, writing anything down is what I'm hearing is a great first step, right? Even just having a working document that everyone agrees is kind of what you do. But at what stage in your career should you start to look for a manager, accountant, or lawyer?
In my opinion, um, you want to know all parts of your business and your music as much as you possibly can. Um, when you get started, you're kind of doing everything. And I think that's the beauty and pain of specifically Seattle. It's like our music scene. We're kind of independently minded, and you have to be your own agent, your own publicist, your own manager. There comes a point when each of those roles get big enough to that where they become their own job. It's hard to tell exactly when that happens. A lot of the time, for like if your business part of your music gets too big for you to handle, a lot of times it's a friend who's super business minded that you trust, that wants to help you, um, kind of grow the business, and that can just start from like the artist manager role. Um, and definitely by the time that a record label's coming in and talking about advances in the whatever $100,000 ranges, you do want to start at least reaching out to business managers by that point. Yeah.
And Dominic, I want to specifically ask you, when do you have any examples of times when artists go from doing their own taxes for a really long time to needing someone's help, to needing someone like you to do that? What are some key indicators of that stage of their career?
Yeah. So first, I want to second when Steven said, really take it as far as you can possibly go. And then that's kind of like the breaking point. It's like, I really can't figure this out anymore, or I really need help. That's kind of when you know to take the next step and reach out to a professional. As far as an accountant go, accountants can be really useful for the big picture stuff, when you get up to that level, but also they're good to reach out to like someone like me, like a tax preparer or an accountant or a bookkeeper, when you want to like check in and tighten things up. A lot of people come to me when they are just when they're over their head, when they've all of a sudden they're filling out 4 different Schedule C forms for 4 different businesses, because that's the way they break it up and compartmentalize it in their head. And all of a sudden they've given themselves all this extra work, and they're not sure about their expenses, but they think they might be doing it right. These things can be really beneficial for just dollars in your pocket. So if you feel like you're just overwhelmed, at least from an accountant and tax preparer standpoint, I would just go ahead and see if you can reach out for like an hour to somebody and just get some help in tidying up your systems and some suggestions. And then you can go from there. Further than that, have someone prepare your taxes, see what they look like when a professional does it, and find someone, if you can, who is relatable to what you're doing, who knows your business and can help you kind of organize things in the right way and then send you off on a good path. Or don't, and just work with them for any length of time and let them do your taxes or bookkeeping.
For what it's worth, what Dominic does, especially in Seattle, is super important, and it really kind of bridges that gap from when you're going to, like, when you're a local band, to when you're starting to see some success and start to get more attention, just beyond the local scene. By the time like an artist gets to the business management level, it makes it a lot easier for us to bring on an artist if we can see, past books and financials and tax history, that there's something, at least there's some record keeping and some stuff there. It's a lot harder to go back, which we do it, if, we have clients that have not done their taxes in like 7 years, and we find that out and it's like, oh my God. And, but it makes you, a lot easier to get to the next level if you're taking care of this stuff. Sometimes that means tapping in an expert, at the right level, and Dominic's kind of one of those people.
Thanks, Steve.
And Keaton, I want to ask you, what are some smart ways for artists to start thinking about investing early, even if they're not making a lot? Most artists are gig workers. So when we don't have a formal 401k or, an employer to match it, how should we approach investing early on in our careers?
It's a great question. And of course, I'm a proponent of investing early. I think that the greatest investors are the ones that invest the longest. There's a handful of different strategies we can take, and I can touch on financial planning a bit here. The key takeaway should be, you shouldn't be putting money away for retirement if you're still struggling on the day-to-day. I always am an advocate of having a protective reserve and a safety net in place before you take the next step of putting money away for retirement. This is generally because to access the retirement money, there's a penalty. You have to be generally over the age of 59 and a half to tap into your retirement savings. Otherwise, you have to pay a 10% penalty. That varies by account and account. So step one, I really recommend setting up an emergency fund. For my clients, I usually base that off of a spending amount or spending allocation. So a client, let's say a client spends $10,000 a year, and will want to protect 1 year of spending, then the protective reserve would be $10,000. Of course, this varies by person and by age. The younger you are, the smaller the protective reserve you can get by with, because your human capital or your career earnings have a higher potential to be realized. The older you are, I recommend having more money in that protective reserve before you take that first step into investing. Now, once you want to start investing and saving for retirement in the long term, there's a handful of strategies you can take. The simplest one is called an IRA account, or an individual retirement account. And that's an account that all of us have access to right now. Really what an IRA is there's 2 kinds. There's a taxable IRA, or there's a post-tax IRA, and there's a pre-tax IRA. So pre-tax IRA, simply, and here I'm touching on Dominic's tax side again. A pre-tax IRA, what that allows you to do is you put money into this account up to $7,000 per year. And the pre-tax IRA will reduce your taxable income, and then it will grow tax deferred until you retire. Tax deferred is a fancy way of saying that like the dividends and coupon payments, really the reason you invest is to get these dividends, coupon payments, interest payments. They won't be taxed right as you receive them. So that's the first way to do it. Very simple. You can go on to Schwab or Fidelity or any of the largest custodians in the world and open an IRA account. The second is a Roth IRA, and there's an income restriction on a Roth IRA, but it is a tax-free account. And this is a cheat code. I think this is going to be my takeaway from the call, is that if you put money into a Roth IRA, while you don't get the tax deduction today, it grows tax-free, and then it's withdrawn tax-free. And so you benefit from having compound interest, the ninth wonder of the world, over your entire working career. And you'd be shocked at how little you have to put in as a young musician, just putting some money under the couch cushions to have that be a significant impact on your retirement. So that's my 2 cents on investing for an artist. I think that's important. Of course, I'm an advocate for investing early, but most important is to make sure you're protected in that short term, because the worst thing you can do is sell stocks in a down market. And to add on top of that and take a 10% penalty on removing your IRA assets can be detrimental to a financial plan. So that's why that safety net is really important.
And for artists who can barely fathom putting away any money, what advice would you have for them for how to get over that threshold of knowing when and why and how and how much could it possibly matter? How much is enough?
Yeah. Go for it, Steven.
Okay, yeah, thanks. It's so hard to make money as an artist. I mean, even just the cost of touring, the cost of insurance when you're going out on the road, stuff like that, for example, just renting a van, expenses. It's a whole art. It's an art in and of itself, working on your cash flow. I mean, this is cash flow management, basically. And as you make money, making your art or your music, you have to think about, okay, what are the costs of, like, I don't know, practice spaces and album art, paying the people that you need to make your music. What is left over of that, you decide, do you want to invest it back into the business, or do you want to split it up between the members? Ideally, from business management, we can get to the point where there's money left over at the end of the year, where you can use the leftover money as like a vehicle for saving on your taxes, and that's when we would talk to Keaton. But the really where that work happens is being super careful with your expenses and your cash flow management, basically. So yeah, there's so many ways that you can do that yourself. As business managers, I mean, we will make regular reporting and stuff, like a cash flow statement, where you have like the money at the top of what's in your bank account right now. Right below that is any shows or music that's coming up that that will come in. And then below that is your expenses of everything all the bills that you have to pay out. And the difference of that is kind of what's left over. That's always just a constant thing that you're going to be managing yourself as an artist, and ideally shove off to someone else once you're at the right size.
So you outlined many of the expenses, but what are some of the income streams, and how big of a percentage of the pie for the average artist are each of these? Can you just outline live, sync, merch, all these different streams, and how much each of them takes up in the pie that is the income of an artist?
Yeah, I think, well, one thing to think about is, you as an artist, everyone's going to be different, but you as the artist, pay attention to what is working. Are you a really good songwriter? And do you like doing that? The recording and the writing and publishing pieces, whether it's writing music for yourself or for other people, that's something, to pay attention to and invest more of into and learn more about. Or if you love being a road dog and you want to tour live shows and touring, that can be a big piece. And with that is merchandising. Always when you're touring, you want to be selling your t-shirts. Some clients do some merch brand partnerships. Some of ours have created their own entire merch companies just because they've had their own success with it. One of our clients, like, they just live off of the merch income and invest the live show and the touring and recording and stuff as they grow. So really depends. Also, sync licensing. You can get a lot of exposure from the right sync. You can get on a TV show or commercial, someone Shazams your music, and then that can lead to more opportunities beyond that. These could all be lanes in and of themselves. And there's some, and I would say, if you know what you like and what you're seeing success in any one of these lanes, invest more of your time and effort more into that.
Great. Now let's talk about cash flow and budgeting a little. So how do we handle when we get big cash influxes when we do? So from crowdfunding or grants. So Sonic Guild gives out an annual grant for artists that's $10,000. And there's lots of local artists who are like, how do I even begin to spend this? What do I need to do? How do I need to prepare for my taxes? What do I need to set aside? Are family gifts or any of my crowdfunding taxable? How do I figure all of this out?
Yeah. Yeah, I can start. So as a general rule, we say that you should set aside 20 to 25% of your gross income or 30 to 35% of your net income for taxes, because that is your personal rate plus your self-employment rate, which is what's coming in. Grants, crowdfunding, that's all taxable income in the eyes of the government. Gifts from family members are not taxable to you as the recipient. They're only taxable to the person who gives it. However, there's a fallacy there that if you give over 17,000 or something in a year, then it becomes taxable. That's not true. You just have to file a special return. You actually have like a $2.4 million limit. I bet Keaton could sharpen me there, but so gifts from family members not generally taxable to either parties. So yeah, you do need to watch out for these crowdfunding, but these big checks, because it's a huge influx of money. Now, the best way to handle it, in my opinion, is to do two things. One, split it up so that not everybody is having not one person is taking the burden of that income, or spend it. Use it kind of what it is intended for, which in those situations are usually big projects. So I see a lot of Sonic Guild grant recipients go right into the studio or go on tour. And the same goes for crowdfunding, which are usually for either touring or making a record. The only thing you want to be careful of, because you might not think of this in the moment, is that the money you receive is taxable in the year you received it. So if you get a bunch of money from crowdfunding in December, and then you're not making your record until the next year, you're going to owe taxes on all that money you received. So you gotta be a little bit strategic of what you're going to do with that money when you get it and what the timeline is.
Yeah, in my experience, if I see a big record deal coming in, the way that we want to approach it is, if that money is coming in to hit your account, let's look at, okay, how much money do you need to live off of to pay your bills personally, and what do you need to spend for, I don't know, whatever expenses that you need to do or to invest in the business. Ideally, I think the goal for I would say most musicians, if they're trying to go for it, is to be able to do this all the time, and do it for their job. Um, it's hard on the business management side if we see these big deals coming in. Excuse me. We see these big deals coming in, and then all of a sudden there's I don't know, a bunch of luxury cars being bought and stuff without talking to us. Stresses us out. It creates more work. If you're buying if you're buying a bunch of stuff and spending this money, than if you were to, be careful and budget for yourself. It's super boring, but it's like live within your means, stick to your budget, and don't spend that money that if you're expecting a big windfall, Sonic Guild grant or whatever, or deal, don't spend it before it's in the bank. Let it come in first. But yeah.
And Keaton, just one last question. Would you suggest investing any of that? Or when you do have those moments of cash influx, how would you approach deciding what to save?
Good question. So there's a few pieces. So Stephen deals a lot with the business side of budgeting. I'm a huge proponent of personal budgeting as well. And a lot of people do both. And it's really important. I love my little budget spreadsheet that I have. I have built a template that I give out to people, and it has never worked. It has failed 20 times because nobody likes to budget. It's not very fun. I think it's crucial for a financial plan, especially for a small business owner. And then to go off what Steven said about buying the luxury cars, buying the fancy countertops in your home, all these luxury depreciating items, you'd be shocked to know how often that is the catalyst to a business blowing up. Let it be in the music industry, buying the fancy cars, buying the equipment that you don't need, that won't increase revenue. If you're a chef or if you're in the restaurant industry, that could be buying tabletops that are too expensive or artwork on the walls. I've seen a handful of businesses fail simply due to bad budgeting and bad spending techniques. And my role here is to do the personal finance side. If you can't do it for yourself, then nobody should believe that the business should be able to track it at the same rate or the same quality that you'd expect a profitable business to see. In terms of investing the grants and funds, there's a few rules of thumb we can implement here. One is if you're planning to use the cash within 1 to 2 years, then you really don't want to take what's called equity risk. Equity is owning stocks. Just think of your favorite large companies like Microsoft or Google in Seattle. When I say equity risk, it's buying into those companies. If you have a grant and you're expecting to spend it in 1 to 2 years, or really up to 4 years, I would not recommend putting any of that money gambling in the stock market. That is gambling. That's not investing. If you're within the 1 to 2 year range, but you don't plan to use the cash right away, there's a few strategies you can take. One, you can open a business brokerage account at any of those large custodians that I mentioned earlier, and you can invest in what's called a money market fund. Money market fund is one of the safest instruments to attract yield. It's currently around 4.5%, but it fluctuates with interest rates. We're in a very unique interest rate market right now, so that yield is higher than you can expect to see in the future. I would recommend putting money in those. If you really have a strict time horizon of like 2 to 4 years, you can also invest in bonds. There's a lot of strategies you can do. The big takeaway there is don't take equity risk if you're needing the cash in the next 2 years, which most of the time with these grants is going to be the case. If you happen to come in a windfall of cash that you plan to use over 10 years to support the band, that's when you can start taking equity risks. That's probably when you need to talk to a financial advisor on allocating between the risky assets and the safe assets.
Yeah, if one of our clients, get a big record deal or something, we're plugging in a financial advisor immediately, because there's tax implications, and we can budget that stuff in. So yeah.
And with athletes and musicians and celebrities that come onto fame quickly, it probably comes with no surprise that their money management skills usually aren't great. And that's a lot of times when I see the big car purchases, the Ferraris, the Lamborghinis, the three houses across the United States or international, all of which tend to be bad investments. Sometimes the houses turn out good, but a lot of times those can have a significant financial impact on the lives of those people, because they just never had that much money come in the door before.
Great. Jessica's going to come back now and we're going to answer a few of these questions from the Q&A.
I'm here with your hard-hitting questions. So I heard you guys say windfall multiple times, and windfall is primarily not what we're dealing with here. So give me, Keaton, like minimum number to make it worth your while to open an IRA, or if I have, say, $50 a month or $25 a month, just so that I can actually get started and build good habits, what do I do with that? Say 25. How can I
Perfect.
start saving 25 bucks a month?
Yeah, and you can start with really any amount of money. In the modern investment world we have today, there's really two investment vehicles that most financial advisors will recommend. One is called an ETF, which stands for an exchange traded fund. The other is a mutual fund. And they are similar. They're a little different, but they're mainly the exact same thing. And what it is you're buying a basket of stocks instead of just one. And that's extraordinarily valuable because it gets rid of what's called not systematic risk. That's the risk that, like, the CEO of Google texts out, everyone's selling and the market for Google crashes. If you own 100 different Googles, then you get rid of that risk. So you can go online. I won't tell you what funds to buy, but you can go online and look up like cheap global ETFs, and it will come up with a list of options. And most of them are very affordable, within the 50 to 150. Some of them are $350 limit. With a mutual fund, you can actually, there's no share price. You can just add money. So you could continue to add your $25 a month into the mutual fund, and it will just adjust your basis each month. So those are two easy ways to get investing, and highly recommended doing that in the IRA platform if you want to get started, especially because most people on this call are young and budding artists. It's a great way to get your foot into investing with the tax advantage methods of either of those IRA accounts, the traditional or the Roth.
Awesome. That's super helpful. So the ETF, or the sort of basket methodology, helps you to diversify your risk without having to diversify into multiple products.
Yeah, you could diversify your risk by owning every stock, but you have to have multiple hundreds of thousands of dollars to do that. So if you're getting started with $25, you might as well do the ETF. They cost like 2 basis points, which is 2% of 1%. So it's almost no cost per year. And when you think about that on the small scale, you're going to pay dollars per year for this ETF. Whereas you can't actually access the diversifying through buying different securities until you reach that high net worth level, once the band goes big.
Right. Awesome. Thank you for that.
Yeah.
Dom, we didn't get much of a chance to get into bookkeeping, but we promised the people that they're probably missing out on some either tax incentives or some sort of deductions on their tax returns, sort of just like based by like not tracking expenses or not keeping receipts thoroughly. So can you just talk a little bit about best practices of how to, build good habits in terms of like making sure that you have your accounting and your bookkeeping in order?
Sure.
As annoying as it is for everybody all the time, like what's the best way when you're on the road to track every receipt? Apps, paper?
Yeah. No one likes to do it except me, I found out. Yeah, so the first place to start is basic record keeping. And I would say find a way to make it as easy as possible for you. So a piece of paper and a pen in your guitar case, in your car, by your computer, start there. And then every receipt that you get from expenses that you buy coffee on the road while you're touring, or you meet up with Steven to talk about business management, keep those receipts. And you can either just throw them in a box at home, or you can take a picture of them. A lot of artists like to put everything in a box, or take a picture and put them send them to themselves in an email, and then put it in like a email folder, and then open that up at the end of the year and spend 4 or 5 hours digging through expenses. That's definitely one way to do it. I think it's a little bit easier if you can do it as soon as you can, right along the way. And yeah, and then that makes my job as a tax preparer and your job as a tax preparer, because we're all kind of tax preparers usually, so much easier. Just having a list of those records ready down and ready to go. And then something that not a lot of people take advantage of that does actually lower your commitment to bookkeeping or your responsibility is taking advantage of something called per diem rates. And this is really beneficial, I think, to a lot of small musicians as well. And you can look online. The General Service Administration puts them out. So for Portland example, if I'm playing a show in Portland, they say that you're going to spend $155 on lodging and $86 a day on food. Well, I don't know any musician that does that. I usually sleep in my car or in the basement after the show, or a friend's house. And I definitely don't spend $86 on food. However, you can't expense that much. And all you got to do is have some sort of proof that you were in that city playing that show. And so that makes it a lot easier. So when you're touring or playing any out of town event, you just go, I was in Portland on this day. And then when you go back, you can kind of plug in those numbers. So that's an easy way to do it.
So just to make sure I understood what you were saying, you don't have to spend that max, but you can deduct that amount.
Yeah, it's kind of a cool little cheat code that almost nobody uses. But people who work for the government and deal with per diem rates or government contracts, they deal with this stuff all the time. But it's available to all small business owners. And that can be real money. Like the numbers I just gave you, the 155 plus the 86. I ran on my calculator here. Just in self-employment taxes, that's worth $36 in your pocket.
Right, for one day.
For one thing to write down. That's not keeping all your receipts. That's not being super, mindful about everything you're doing. That's just writing down your location, where you were, and some sort of proof. So there's a lot of basic stuff.
$36 a minute.
Yeah. I mean, like if you're touring, if you're out 2 weeks, what 36 times, let's say 10 shows, $360.
That's awesome.
And for us, I mean, that right there, if that's free money, then you give it to Keaton, you say, invest this, and there you go. You started your Roth IRA, and now you're off and investing.
That's awesome. And then do you know, or would this be on the you said GSA.gov, is that right?
Yeah, GSA.gov.
So what types of proof do they require to show you were in a certain city on a certain day? Is it just like your tour listing on your website? Does that work? What do you need?
Sure, you want something that won't go away or be replaced. So a lot of times tour schedules on bands in town or your website, they'll go away after you've played them. You take them down from their website or it goes away. So the best way to do it is keep some sort of receipt from that experience that kind of, most receipts will show the location and the timing. And then you're writing down, if you're keeping a physical record, the IRS acknowledges that as good record keeping. And also a show poster doesn't hurt. Print off a show poster, put it in a folder on your desktop, or throw it in a box. You're really only keeping your receipts if you are not tracking things regularly, or if you get an audit, which is very uncommon, honestly. But it does happen. And audits don't always happen with the whole scope of your financial situation. Sometimes they'll send you a letter and be like, prove this specific thing. And so that's when you pull out your receipts.
Okay, awesome. I think I have another question for you, which is if a band performs at a benefit show for a nonprofit, can they deduct the performance as like an LLC? Can they deduct that?
No, because then you're deducting hours, essentially your time, and you can't deduct time. But you could deduct your miles going there. If you had to have a meal or drinks beforehand to talk about your set list to gather, you could do that. Not just drinks or meals is a deduction, but if you're meeting as a band, we often will go and get food or drinks before a gig, and we will write out the set list and talk about things. There you go. There's a deduction. But yeah, your hours can't count as a deduction.
So if there's an example though of a band who say would normally get like a $500 performance fee and they waive the fee for it, like they've been offered that fee, but they waive it to like to donate it back essentially, could they deduct that as a charitable donation or no?
My experience, no. The only way that could be a deduction is if you received an official letter from the organization saying you donated this and its fair market value is $500. And even then, you can't deduct it from your business expenses, and it goes to your personal. And there's, especially small artists, there's very few of us who itemize deductions, which is the situation where that would be applicable.
Cool. Okay. I've got one more question here from the audience, and then I want to do just like a last piece of advice. So, Stephen, this is probably for you, but everybody feel free to chime in. Are there any organizations that connect independent musicians with music lawyers that also help to cover or subsidize the cost? Is sort of part A of the question. And then part B of that question is, what is the entity? Is it a music lawyer? Who is the best person to help an artist understand the different royalty streams and the best kind of publishing arrangements? Is that a lawyer or is that somebody else?
Yeah, I mean, typically, the lawyer's you're like the expert there. As far as, as far as like resources for finding lawyers, I don't have any sources. I mean, just from like, I would say just do as much old-fashioned searching as you possibly can, because every law firm and business manager and manager and agency, like the function of their jobs are the same, no matter what. There is like that is the artist's team, but there's a lot of difference in the types of clients that they work with, or their approach, or or the size of the firm, whatever they are. Maybe they're looking for up and coming artists, or they love your genre, or there's some kind of connection there. I always, at KLBM, I always love to have intro calls with clients, even if they're not a good fit for like the roster right now. But I know, this other firm, this business manager in LA, who's like they're looking for someone, who's at this certain point, and it might make sense. So I can make the connection. That's the same with lawyers and managers and labels. And a lot of times it's just email them. Like people, it never hurts to send an email. I always love trying to help where I can, even if it's not our own clients.
Awesome. Okay, thank you. All right, so we're going to end on one last piece of advice that you all might have. So Dom, we'll start with you. We'll do Dom, then Keaton, then Stephen. What is one tangible, actionable thing that our audience can do this week to get them on the right path?
I'm going to go back to what I was talking about before. Put a box in your room, or just take pictures of your receipts and find a piece of paper and a pencil that's lined, and start just like writing down the things you buy. And that will make your life so much easier and will start to snowball good bookkeeping habits.
Keaton?
I'll do two takeaways. My first one is treat your music career like a business. I think that's crucial. Track your expenses, track your spending, track your income, both on the personal finance side and the business side. And then my second takeaway, I talked a lot about the IRAs today, but go open an IRA and a Roth IRA. You can open both at the same time. It will take 7 minutes. You'll then have it set up. And when cash comes around, you can throw in your $25 a month or $25 every couple months just to get the healthy habits of investing starting early on in your career.
Awesome. That's good advice. Stephen.
Okay, I have two as well.
Sure.
But I mean, and Dominic,
Richard.
sorry, Dominic and Keaton, you both touched on it, but it's record keeping. Dominic, you said throw everything in a box and like with your pieces of paper. Keaton, you said track your expenses. My suggestion is start a Google Drive, snap every receipt and throw it in there. Every piece of income and expenses you get, just throw it in there. And then the other side, a client that once told me, the realer the heart, the realer the art. And really the art comes first over all of this. Your art needs to take center in every piece of this. That's why we're all here. Don't let all of this talk about money freak you out too much, because really at the very core of it, it's all about what you create. Don't get wrapped up in all of this money stuff until it's time, but make sure you keep the music and the art center.
Yeah, for sure. And I think everybody's just out here like trying to figure out how to optimize, and the revenue streams that they do have, how to make them last longer, how to build good habits, how to, like manage budget and cash flow, and in terms of splits and working with other artists, what are fair percentages and what are industry standards and things like that. So thank you to our panelists. Thanks guys for joining us today and for this informative conversation. Thanks to Kay for leading our panel today, and thanks to all of you for tuning in. We will be sending some additional resources to the email addresses you used to RSVP, so keep an eye out for that. Dominic was kind enough to share a really helpful PDF document, and I believe that you all agreed to share your contact info, so we will also send that around as well. And hopefully you'll be up for some referrals and some consultations, because you have some eager folks here that would love to dive deeper on a lot of what you talked about today. Obviously, we can't cover it all in an hour. So thank you so much for your time. Thanks everyone for joining. Our next session in this series will be held on June 3rd at 5 p.m. Pacific, and we look forward to seeing you all then. Thank you so much.
Thank you.
Jessica.
Bye.
Bye.